guys, welcome to Talking Money with Nuzi, personal finance made simple. Today, I'm going to be talking about how the repo rate works and how it affects you. First of all, let's talk about the South African Reserve Bank and what it does. The South African Reserve Bank is the central bank of South Africa. It is responsible for managing the supply of money, managing inflation, economic growth, the country's financial stability. It also supervises and regulates the banking industries and insurance industries. It issues new banknotes and coins, and it manages the official gold and foreign exchange reserves of the country. Basically, the South African Reserve Bank is the big brother of the financial industry and the South African economy. Now, let's talk about the repo rate. What is the repo rate? The South African Reserve Bank lends money to commercial banks. Then the commercial banks lend money to us, the public. Commercial banks are just your everyday normal banks that me and you do banking with. The repo rate is the interest rate that commercial banks pay the South African Reserve Bank for borrowing money. At the moment, the repo rate is 4.75%. Commercial banks then make a profit from lending us money at an interest rate that is higher than the repo rate. This is why when the repo rate increases, your loans also increase. What is the prime lending rate? The prime lending rate is a top up of the repo rate that commercial banks use as a starting point to calculate interest rates for their customers. The current prime lending rate is 8.25%. The prime lending rate covers the bank's basic profit, and then this rate is adjusted up or down based on the customer's risk profile. This means that when you go to the bank to take out a loan, the current starting point for interest charges is 8.25%. The bank will then adjust this and charge you less than 8.25% or more based on your risk profile. This is why your credit score is so important. If you have a poor credit score, then you are considered a risky customer and you will get an above prime loan. While a person with a good credit score is considered low risk and they could get prime or lower. That's why when you apply for things like a home loan, you will hear them saying prime plus 2, which means they are charging you 2% above prime. Or they can say prime minus 1, which means they are charging you 1% less than the prime rate. The next question is, why does the South African Reserve Bank increase the repo rate at all? Why don't they just keep the rate low and let us have a party as a nation, right? Guys, remember, one of the duties of the Reserve Bank is to keep inflation under control and to make sure that the rand maintains its value. When they lower the repo rate, interest rates also go down, making borrowing cheaper and more accessible. This makes people take on more debt, and it could help to boost a slowing economy. When they increase the repo rate, interest rates also increase, and it makes your loans and borrowing more expensive. This makes people take on less debt, and it results in less money circulating in the economy, which helps to slow down inflation and to stabilize economic growth. Basically, the Reserve Bank is like the captain of our economy. It is the captain's duty to make sure that we don't crash into the rocks and drown. Sometimes the decisions taken by the Reserve Bank may affect us negatively on a personal level, but it is important to remember that their mandate is to make sure that the entire South African economy is safe. If they fail to manage the economy and inflation, then South Africa could end up like Argentina, Venezuela, or Zimbabwe, where the government prints more and more money, devaluing the currency and causing prices to spiral out of control, causing them to print even more money until people need to carry money in wheelbarrows to buy basic things like bread. Okay guys, that's it for today's video. I really hope that you understood and enjoyed it. If you did, please give it a big thumbs up and subscribe to my channel. Until next time, bye guys.